Hey traders, Raghee here, and in this recap video, we're going to cover the energies sector, meaning crude oil, unleaded, and the heating oil market. Now these three are still within a good probably 3 to 4 weeks before the seasonal cycle starts to wind down and we start to look at what the OPEC news may be, and then the ongoing uptrend, which has actually organized pretty well in these markets. Now, crude oil and unleaded both, or I should say gasoline, both pull back really nicely to levels that in front of the Iran sanctions and in front of the Iran nuclear agreement withdrawal from the US. A lot of volatility, but notice that it hasn't derailed the uptrend. I don't think sanctions are going to be negative for crude oil. In fact, one of the things I mentioned in the chat room today is no matter what, crude's a winner. We withdraw from the agreement, crude's a winner. There's sanctions, crude's a winner. There's no sanctions, crude's a winner, no matter what. It was just going to be the depth of the correction that we may see. Now, the next catalyst, the next fundamental catalyst for this market is going to be tomorrow's EIA release. Now, before the EIA release comes the API. And the API, or the private inventory numbers, showed a pretty decent little drawdown. And that means that that's going to help crude head higher. Now, the real play between the crude oil inventory's private number and then tomorrow's EIA numbers, the real play is the difference between what we saw come out with the private numbers and then how the market jockeyed ahead of what will be tomorrow's release at 10:30. And of course, with the drawdown, you'll see that crude ended up higher. What I'd really like to see is, for the sake of a pullback buy, is perhaps a surprise build or a drawdown that is not as positive for crude as the API drawdown reflected today. So anything that would give us an opportunity to snap back to the wave, or even this area here, 67.85 to 67.55. The same thing is going to be true for the gas market. Now, a couple subtle differences, and I think we're seeing a little bit more volatility because of it. Notice that we stopped plotting propulsion dots on the gas market on this contract here. Another thing that I would recommend traders do is look at July. I would highly recommend traders look at the July contract for crude oil for sure, and consider the July contract for gas, for the RB contract. One of the things we're going to talk about in the premium video is the importance of understanding when to and when not to respect moving averages, and how it is nearly foolproof if you use propulsion dots, which is, by the way, a free indicator available across multiple platforms. How do you use propulsion dots in lieu of exponential moving averages to make sure you're not using EMAs that are less likely to act as support and resistance? We'll talk about that and a whole lot more in the premium video. I'll see you in the next update.